Breakthrough Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Welcome to the COB this Tuesday afternoon. I'm Juliette Sarli. Great to have your company. Let's delve into the trading day that was. We thought it was going to be a positive session. We had that nice uptick of about 0.4% on the open following a pretty good rally on Wall Street overnight, particularly in those tech players, with the Nasdaq up 2.7%. But then we started to see some wobbles come through in the first hour of trade, and you can see that a lot of selling happened in the afternoon before we managed to close just 0.2% higher there on the CBO 200. Having a look at where the ASX 200 is finishing the session, only up by about 0.1% or 9 points. Now, a lot of this nervousness, of course, really being caused by what happened at Bendigo and Adelaide Bank, that Deloitte review showing that there was quite a lot of concern about its banking, its anti-money laundering, factors of what's happening in that business. That just saw quite a bit of sell-off more broadly into the banking sector, and a correction here sort of potentially telling a bigger story of investor concern amongst the banks. So strong start, soft finish with the banks dragging, and then of course we've got inflation anticipation, that monthly CPI print coming through tomorrow for the month of October. So we've moved from the quarterly to the monthly. A little bit more data for Michelle Bullock & Co to delve into ahead of the December interest rate decision, where we're not expecting anything to happen. Let's have a look at what happened with the sectoral moves on the market today, kicking it off with the banks that were dragged down by that overall weak momentum. CBA down by another 1.1%. Macquarie Group also down by about 1.1%. The material space looks pretty good though, and a lot of gains coming through from the gold players today. You can see Newmont up 4.4%. Gold prices holding just under $4,100 an ounce, and that is on that expectation that the Fed will cut in December. And then of course having a look at what we are seeing in the tech space. That was what lifted Wall Street overnight. WiseTech going the wrong way, but Xero, NextDC, Tech One and Zip all looking pretty good. In corporate stories, WebTravel was a standout. It's finishing high by about 8%, posting a record first half, saying it's on track for a record full year 26. A lot of pickup in the Americas, and of course all driven by this WebBeds business. But its CFO is leaving, and he's been poached by PEXA. So that is Tony Ristoveski, who's going over to PEXA there. Iress shares down by about 5%. We had, of course, Iress there talking about the fact that it has really clarified these media reports over the acquisition. Ramsay Health Care shares, though, rising after it tipped higher earnings for full year 26. And DroneShield surging after the controversial defence company won a $5.2 million contract from an existing customer to supply an unnamed European military company. Linus, it says it's had a power outage at its Kalgoorlie facility, urgently assessing off-grid power solutions. It thinks it will affect about a quarter's production. Shares pretty flat though. IDP Group, it was higher on that upbeat half-year forecast, and SIG Global up by 6%. It secured $650 million in work across Australia and New Zealand. Bendigo and Adelaide Bank was also meant to be there, and our excellent producer Marius put it in, and our not so excellent anchor Juliette Sarli took it out. So let me just check where they're finished down. 7%, $10.22 is where Bendigo and Adelaide Bank is. Let's get to our guest and welcome Martin Crabb from Shaw and Partners. So what did you think of the Bendigo and Adelaide story and what that tells us about the overall banking sector?
Yeah, I mean, it's not the first bank to have a consultant go through and find gaping holes in their compliance infrastructure, which is what Deloitte seemed to have arrived at with Bendigo and Adelaide Bank. I mean, working in the financial services industry, I can say firsthand that the heavy hand of regulation is coming down. It seems to be coming down all the time, whether you're doing managed accounts or superannuation or anti-money laundering, counter-terrorism financing. The regulation is moving really fast, and sometimes a bit faster than some companies can keep up with. So I think if you've got a really good tech stack and you're on top of things and everything's in the cloud and you outsource most of your stuff, you can upgrade pretty quickly. But if you've got legacy systems like some of the banks do, just upgrading everything. We have most of us use Cloudflare to stop the cyber attacks, and we've had casinos run into problems with their regulatory framework. You think of all the businesses in the world to have a regulatory framework on money laundering, it'd be casinos and banks, and they seem to be the ones that are struggling with it. So I think it's a combination of, I suppose, management a little bit asleep at the wheel as to the nature of the speed of changes, and also, you know, how nimble your technology stack is that you can actually keep up with it. So obviously a red card, not a yellow card, but a red card for Bendigo on a day that banks were weak anyway. So was it worth 7 or 8% on the share price? I'm not sure that it was, but I think people are looking to de-weight the banking sector as they see maybe the Reserve Bank's on hold. The inflation number tomorrow is going to be strong. You know, no interest rate cuts, maybe banking, credit growth slows, housing prices slow. There's a lot of money being made in banks, particularly CommBank. It's been a great performer. I think people just generally, us included, taking money off the table, and today was another example of that.
Where we did see some upside, though, as I mentioned, was in tech, and you noted Life 360 getting a little bit more normalisation.
So this is a stock that it's probably, if not the number one holding for most small company managers, then in the top 5. It's a great story. It's a freemium business where they basically give away a tracking service, and they've got 90 odd million customers, mostly in the United States. It's really an American growth company, just happens to be listed in Australia, and that's been great. But the question is, can the company now monetize that? Can you start getting people paying for it? They're adding more services on, they're adding more verticals on, they're looking at aged care, they're looking at pets. So there's a whole bunch of sort of growth options, but the company missed on the net new customer adds at their last result, and the market just wet the bed, so to speak, and the stock got sold off really heavily along a time that other growth stocks globally were being sold off. So it got absolutely smashed. I think it was 35-40% down from its high just in a few weeks. So this is the earnings trajectory of the market of Life 360's earnings. So this is looking at quarterly earnings forecasts going out, and you can see this company is expected to grow by almost 50% per annum, and earnings per share will grow from sort of flat to zero a couple of years ago to earning up to $1.25 a share. So yes, at $40 a share, it looks expensive on today's numbers, but the growth trajectory of this business is quite substantial. If they can monetize those 90 million customers, then the revenues and the profits could be multiples of where they are today. So I think longer term, it's one of the best growth stories out there, but with nosebleed valuations, you do get the volatility. So we've used this sell-off that we've had to add to our position in 360, and I imagine a lot of small cap managers will be doing the same.
All right, let's get to what we saw with the overall economic picture. So weaker than expected job ads from Seek.
Yeah.
Is that something that we should be worried about for the bigger picture data?
Yeah, look, I think everyone's sort of ignoring the labour market. So everyone forgets that most reserve banks, central banks, have a dual mandate. Yes, they need to get inflation under control, and that's what all the focus is at the moment, particularly as you mentioned with the CPI coming out tomorrow. But they've got to also keep an eye on the labour market. And if you look at a time series of job ads from Seek, and yes, they're not the same as the ABS ones because it's just their ones, but a lot of people use Seek, particularly for blue collar work. And you can see that job ads have just stagnated. So we've been in a bear market for labour since pretty much 2021. It's I'm going to say a bear market. The number of job ads has been falling for coming up for 5 years, and that's a pretty long downturn. So it doesn't feel like a recession in the labour market, because the number of job ads is still strong, but they're not going up, and they haven't been going up for a while. So that is the other part of the dual mandate. So inflation's one side, unemployment's another, and no one's focusing on it in Australia. Everyone says, the Reserve Bank doesn't need to look at the labour market because it's fine. They just need to focus on inflation. That can flip pretty quickly. We get a couple of bad months. We get a few layoffs, for example, over the Christmas New Year period, which companies do tend to do that, unfortunately, letting people off at Christmas. If we get some weak labour numbers, then people will start thinking about rate cuts. But as the futures market shows at the moment, Juliette, there is no probability of being assigned to any rate cuts at all. Everyone's decided the RBA is done. There's probably a small chance being factored in maybe in the middle of next year. But I'm just pointing out that with labour market being a little bit soft, it doesn't take much for it to crack, and we could see people focusing on that in the new year.
Sort of almost a speculation now. Maybe a hike is more what we could be looking at some point next year.
Don't say that. You've got too many people with mortgages listening to your show.
Well, I have
who
one
just
too,
had a little bit of a heart attack.
I did read
Did
a
she
note.
say hike? No.
When I ask you this next question, I'm going to go back into my notes and find what note I read that from. So I'm not talking out of school, but I want to flip back a little bit to the market and what you thought about Ramsay Health Care.
Yeah. So this is an interesting company. This has been a a market darling for so many years. One of the charts I sent through was their earnings per share estimates going all the way back to, I think it might be the next one, going all the way back to the 2000s. And it had a very strong growth trajectory for a long period of time, but was down weighted like a lot of other stocks. Healthcare has been a really tough space, and not just in Australia but globally. Most investors might have a holding in Ramsay or CSL or one of these other healthcare stocks that's been really bashed around. So the result that the company came out with today was actually a beat, and I don't think they've beaten for a long time. It feels like they've been downgrading for a long years now. And they came out and said their Australian hospital operations are going quite well. Revenues are up 6.5%, earnings were up slightly below 6%, and the market's not looking for that. The market has been concerned about their French hospital operations because they have been struggling to make progress there. But the fact that the Aussie business is starting to hum, so this has got some reasonable growth factored in. The red line's the latest numbers. You can see it's being downgraded from 22% growth to 20%, but still at 15%. If this company can grow at 15%, earnings per share growth over the next few years, it probably deserves to trade on a higher PE ratio than it's trading at the moment. And so it has been derated like a lot of healthcare stocks have. Today was probably, it's one swallow in a summer, right? So we do need to see a continuation of this trend, but probably explains the market reaction today. The stock was up, I think, 12%, because I think, it's been derated on the belief that its earnings growth has slowed. But if it can do that 15%, then it's probably going to trade higher.
CBA, we will continue to run close to the economy's speed limit, so the RBA board will be constantly on edge. Rate cuts will remain off the agenda if the economy builds more steam than we expect. Watch for rate hikes in 2026. Yeah,
well, they're an outlier with that view. Most people have just taken rate cuts off the table. So we're very close with George Theranou at UBS, and we tend to sort of follow his advice on the rate. And he was one of the first people to take it off the table, expecting only one in November anyway. So everyone's taking that off the table. I think hikes is a little bit premature. My concern is that there is the potential for further softness in the labour market. Yes, the economy seems to be improving, but I think companies are looking to shed labour, and so I think there is downside risk in the labour market. And just remember, the RBA is still at restrictive policy settings. They've said that. Governor Bullock said that a number of times in the last few calls. They may be moderately restrictive, but they're still restrictive. So unless they think inflation's heading back up, they shouldn't be even contemplating hikes, in my view.
And you would wonder what that would do to the property market too, when it's already so expensive. Ouchie. All right, Martin, thank you. Martin Crabb from Shaw and Partners. All right, well, WebTravel, it's getting confusing with the demerger, but WebTravel was the stock of the day. And Michael Wayne from Medallion Financial, Francesco Destratus from Ord Minnett joined Nadine.
It does seem like the update was good. Anytime you can grow your volumes, maintain your margins, that's always a positive. And it's clear that they are, winning significant market share in that space. And it's a global business with a large addressable market. So that's definitely an attractive attribute. If they can continue to deliver those numbers, I think the outlook is good. For now, I'm just going to go a hold based off today's strong numbers.
In this space is probably the one I would be going for, as opposed to others. Just on the WebJet Group, if you like to take a little bit of risk, a little bit of volatility in that share price, I think there's some corporate raiders out there that see good value in the WebJet Group and don't think management are capable of getting full value out of it. So there's been a couple of takeover bids on it. I think we'll probably see some more, so there might be some more upside on that side of it.
Thinking about your pre-Christmas shopping? What if you could buy some stonks on sale? Our final virtual event for the year is Cyber Monday. Join expert analysts live as they share their picks of undervalued equities.
We're looking at between 400 and 500% upside.
Because it is going to rally away very, very soon.
Beat the Christmas rush. Register now for Cyber Monday at ausbiz.co/cyber.
All right, let's have a look at the market leaders. We have flipped back into positive territory on the close, led in part by DroneShield, of course, smashed last week, but some new contracts with Europe today up 15%. Ramsay Health, we just touched on that with Martin Crabb. And of course, WebTravel Group we touched on there too. Catapult coming back after being sold off last week, and Hyperion X up 10%. To the downside today, Bendigo and Adelaide Bank, of course, and the ripples that had throughout the rest of the banking sector. Iress saying, look, we're talking to lots of people. That Australian story apparently not correct. It fell 5%. Helia, Medibank, Domino's also under pressure. To the small end of town, Metallium up 23%. Titan Minerals also looking good. Sun Silver up by 11.3%. In the laggards space of the small end of town. A couple of gold stocks like Felix and Bougainville Copper. Wow, I wonder what happened there, down 49%. Tonight on Wall Street, we're getting retail sales coming through for the month of September. There is expectations there that there could be an increase in spending. Of course, we're awaiting Black Friday sales as well after Thanksgiving. And then the US Conference Board Consumer Confidence for November expected to edge lower. All right, looking ahead tomorrow, as I mentioned, the new monthly print for October, CPI, construction work for the September quarter as well, the RBNZ rate decision in focus, and they are expected to cut again. A little bit of earnings, including Fisher & Paykel Healthcare and Select Harvest, while AGM season continues with Harvey Norman, Temple & Webster, and Linus. Linus, of course, announced that outage in WA today. And worth noting with Harvey Norman, I did note that Johannes Fowl from Morningstar was on with Andrew yesterday saying, look, Harvey Norman, JB Hi-Fi, in his view, not some of the retail picks, but he likes Accent Group. And that was one that he thought could have some more upside there. All right, let's recap where the market has finished. Up 0.2% there on the CBO 200. The ASX 200 up by 12 points, 0.1%, 8,537. DroneShield top performer there. And of course, if it wasn't for that laggards in the banks, it would have been probably a better day. Materials, Infotech, both having a solid showing. We'll do it all again from 9:45 a.m. Eastern. Tomorrow, we'll see you then.